Small scale and medium enterprises make up 95% of businesses all over the world. Today, we want to find out what exactly are SMEs' tax obligations. We won't be doing this conversation alone. We have our guest in the studio. He is Mr. Kayode Okunwola, the managing partner, Broadway Advisory Partners. Good morning.
Good morning.
Good morning. It's good to be here.
So good to have you. Yes.
Yes. Okay, so now we're talking about tax obligations for small and medium scales enterprises. So I want to know, what exactly are their tax obligations?
Yeah, thank you. I think generally there are two basic tax obligations for every business or every entity.
Okay.
Firstly, you need to know your tax obligation as a taxpayer and also your tax obligation as a tax agent. Right, so as a taxpayer, it means that when you pay the tax, you are the one that feel the impact. We call it incidence of tax. That means the money comes from you, and so you feel the pain. And so when we talk of your tax agency, it means that you are just a pass-through, right? The government expects you to deduct the money. It comes to you, and you remit at due dates. Okay. So examples of situations where you become a tax agent is pay as you earn. So if you have staffs, you're expected to deduct taxes from their employees, from their salaries, and remit to the internal revenue of the state you reside. Okay. If it's Lagos, it's LRS. If it's Ogun State, it's Ogun State Internal Revenue Service. Also, another situation is value-added tax, right? So the law expects you to charge an extra 5% on value of goods and services and remit to the federal government, which is FRS. So, those are basically the obligations. So you have, as a taxpayer and also as a tax agent, also is withholding tax. So once you have a contract of supply and before you pay your supplier, the law expects you to take some percentage. It can be 10%, it can be 5%, depending on who has rendered the service. And so you remit accordingly. Withholding tax is tricky. Okay. So you have to know who your supplier now. You must know who collects his income tax. So the person that collects his income tax is the person you remit is withholding tax to. Okay. So if it's a business name or an individual, you remit his withholding tax to State Internal Revenue Service. So if it's a corporate person, then you remit to FRS.
Okay. Now, we know that as a citizen of a particular country or environment, paying your tax is important. Now, I want to take you back a little bit, and I want you to talk about why it is important for an SME to pay their tax, or why it is actually important for anybody to pay their tax.
Well, so there's a general saying that he that must come to equity must come with clean hands. So if you're going to, we're quick to, as citizens, we're quick to accuse the government of what we have been paying. We are not even seeing it. What we've paid, we don't see any impact. We've not done anything with it. But that's not the conversation. Taxes are for redistribution of wealth. It is supposed to be your own contribution to the development of the state. The government we have a lot of expectation from the government, i.e. provision of infrastructure, provision of basic amenities like the welfare system, the health system, also even the less privileged, social services and all. So taxation is supposed to be part of what the government uses to provide all of this. So anytime you refuse to pay your tax, you just have to think of you're part of the people that is not allowing the roads to be good. You're part of the people not allowing the education to be good. You're part of the people that is not allowing the government to, have a social security plan for the less privileged. So it's not the way we look at it that I don't know what they're doing with my money. So it's about what are you contributing to the development of the state, right? Because if you look at the developed world, right? how you know one of the reasons or why they prosper is the ratio of their tax collection to their GDP ratio.
Okay.
Right. So you find out that most of these countries, the minimum you see is a double digit, which is 10%, 15%. That is the amount of taxes they are able to collect on overall income, overall goods and services in that nation.
All right.
Nigeria is about 6%.
Oh.
Right. So your guess is as good as mine. So if you have a prosperous nation where you have 15, 16, 17% collection of taxes, and we're just 6%. You know, so.
Okay.
That's serious.
Yeah.
But, okay, I've heard people say small-scale businesses, oh, I've not earned so much, and why should I pay tax? So do you think there are effects as to paying tax for small-scale business owners?
Well, you see, I try to, for me, what I try to do is I try to be on the side of the small business owners, you know, not on the side of government, right? And I try to explain that, look at it from this angle. You see, you have a business to grow. And so there's a limit to your growth if you don't comply with your taxes. Secondly, tax payment is not as expensive as we present it to be. Because the problem we have is, on our own, we have a way of creating penalties. Tax penalties are much more than the actual taxes people pay. So all you need to do is just to ensure that at every given point in time, you regularize and you avoid those penalties. There's sometimes that what the law requires you is just to file. If you don't make profit, you don't have to pay tax, but just file. Just file. For instance, if you don't, the law expects you to charge 5% on your goods and services and remit on or before the 21st day of the following month.
All right.
The law also says that if you have not made any sale, come and file nil. So if you don't file the nil, then you incur a penalty of 5,000 naira.
Wow.
So which is cheaper?
Filing is cheaper.
It's cheaper.
Filing
You know, so
is cheaper.
even if it's 100 naira, so you made the penalty, the VAT on it is 5 naira, right? So you refuse to file 5 naira, and you incur 5,000 naira. When you are eventually going to file the 5 naira, you still pay the 5,000 plus the 5 naira.
Oh, wow! I didn't know that. I didn't know. So now you've mentioned filing. I really want to know. Can you explain what is the process that goes into that?
Okay, so the law says that once you register your company, right, you have up to 6 months to present yourself at the tax office to register as a taxpayer and a vatable person.
All right.
You know, so once you do the registration, you have what is called tax identification number.
Okay.
Right. So if you don't do that after 6 months, then you incur a penalty of 25,000 naira and 5,000 naira until you come to regularize.
Do people know this?
Well, I think that's where I also have a little challenge with the tax authorities.
Okay.
I think they need to advocate. They are doing a lot of advocacy, actually, but I think we can do more.
Okay.
We can maybe before companies are registered, they might want to collaborate with CAC. Maybe there's something like terms and conditions that you must have read before you check it and you are allowed to, maybe something like that, right?
Okay.
So that people can really understand what they are getting into. So if you, back to
the filing. Yes.
So once you have a TIN number, the law expects you to tell the tax station that I am commencing my business.
All right.
I am not yet commencing. So if you are commencing, you are expected to now start VAT filing every month.
Okay.
Either you made money or you don't make money. If you don't make money, file nil. Right. So at the end of 18 months, being a first the first year you are expected to file, you're expected to do what is called an audited account and, submit to the tax station, wherein you tell your audited account tells the result of that period and the profit you have made in terms of accessible profit. And if you have made loss, you also show it, right? So the law also says that for the first 4 years, you don't have to pay any tax if you do not make profit.
How
do you understand?
Is that?
Yeah, so just submit your audited statement that shows that you have made a loss.
All right.
Okay. Right. So once you make a loss, you then in submitting the audited statement that you have the assessment forms. So you fill all the documents, you fill the documentation, and you submit it. So, but from the 5th year, the minimum tax rule will apply.
All right.
Of course, you are not expected to be in business if you are just going to be making loss
for 4 years.
For 4 years.
Yes.
But the law still anticipate that there might be some things that will make you to have made loss for 4 years consistently. And you, even to the minimum tax, you still have exceptions. Those in agriculture business, they are not expected to pay minimum tax. And if you have a company wherein the equity participation is about 20% foreign, you are not expected to pay minimum tax. So these things that have been laid out. It's just the issue with business owners is not wanting to comply. And it's the reason is not far-fetched. The tax morale here is low. And it's what everybody says. Tax morale, why should I pay? We may be right to some extent that, okay, I can't see any reason why I should pay, no road, no this, no that. But gradually, you do not have that right under the law to say, I'm not going to pay.
This has been enlightening. Like, most people are not aware or do not know about, you filing.
I didn't know about filing tax.
Even when you've not made so much money. Some people feel, okay, I've not made money, then I don't think I should pay tax or have the right to pay tax. But thank you so much for, enlightening us on SME's tax obligation. It's been a pleasure having you on the show. Thank you so much, Mr. Kayode.
It's my pleasure.
For coming.
Thank you.
He's popularly called Tax Doctor.
Yeah. Now, I want to ask a very quick one. It baffles me a lot, especially when you're not in the country. Like, I don't understand it, so I want you to shed more light into it. So when you go to a store outside the country, you know that there's a value-added tax on a product. But sometimes after you, not the value-added tax, for instance, I want to purchase this cup, I ask, like, okay, how much is it? They can tell me, oh, it is 5 naira. Then by the time I'm about to pay, they'll be like, it is 7 naira. It is 5 naira plus 2 naira, which is tax. And it confuses me. Why?
Yeah, so from the way you explain, usually they charge value-added tax. That's right. So whenever you provide a value, you must assess that value to VAT percentage.
Okay.
Oh.
Right. So, and it differs from climes to clime. In Nigeria, it's 5%. Abroad, some countries is 15, some is 20, some is so. But it's just anything you do, you must have that VAT rate, subject to the exceptions, right? So if you are in medical line, education, agriculture, all of those guys do not pay VAT. So there are some transactions that do not attract VAT. But aside from all of those, you have to. Another issue that SMEs do have is to say that my client does not want to pay VAT. My client don't want to pay.
Okay.
The law does not give your client the choice to pay or not. So, and guess what? Any VAT you do not collect or you do not charge, you are the one that will pay it.
Pay for it.
Wow.
Interesting.
That's the position of the law.
Do you like the video you just watched? Then you should click on the like button and move over to click on the subscribe button. Also, you should click on the bell to get notified anytime we drop amazing episodes of Tea or Coffee for you. Adios.